Alright guys, so we're going to be doing a quick little market review for NASDAQ 100. Just a couple things I want to point out before we drop down to the 15-minute chart. I think everything for the most part, 15-minute is my bellwether chart. I can look at that for trade entries, executions, obviously daily, weekly, 1 hour. I'm looking for bias of where the trade is going to go, but for this presentation today, we're going to be mainly focused on the 15-minute and the lower time frames. And I apologize if there's a little bit of background noise. I'm actually sneaking off here. So I apologize if there's a little bit of noise. We got a full house right now, but it is what it is. This is the only time I had to push this out. So right away, I want to point your eye to the level at 18068.75. That is your weekly bullish order block mean threshold. Let's pop over there. 1 week. Alright, so that level that I'm pointing out there is this candle here. The midpoint of that wick, the entire range from this high to this low, we're looking at that range. That's our weekly bullish order block mean threshold. You see how price dropped right down into that twice this week. Or, I apologize, last week we dropped down into it, this week we dropped down into it and rallied. Are we bullish? I don't know. Have we seen the quarterly shift? I don't know. That's up to you and next week for us to see in the price action. But one day or daily time frame, you see the same thing. This level here from this candle's low to this candle's high. Let's drop our box or rectangle on that. We have this area here. That is our daily BISI, buy side imbalance, sell side inefficiency, or fair value gap. That is the classification. So you see, like I told you guys, go back to my Power 3, fair value gaps revisited, whatever, I can't remember the name of it. Our eyes are on the high to the midpoint of any inefficiency or imbalance. We want to look at that for reactions. And as you can see, multiple times in this daily BISI, we've come down, rallied, come down, rallied, come down, rallied, come down, rallied. And again, today, this week, come down, rally. All right, so those higher time frame levels are going to aid you in your analysis during the week. This was a target for me this week. I wanted to see price run into that. I won't lie. I wanted to see us trade a little bit deeper and probably close into the lower quadrant of this BISI. We didn't get it. We rallied. Expected after a large drop, some kind of profit taken from there, but those are the main things that I want to point off. These areas here, those are our new week opening gaps. This is our current new week opening gap here. This is last week's new week opening gap. So you actually want to keep those on your chart pretty much continuously, because the algorithm will go back to those and reuse them. You will find that they will continue to act as support, resistance. You want to keep those on your chart all the time, at least the most recent ones. So as you can see, we blow through the current week, new week opening gap, and then we run right up into the next one. And you can see we kind of just close right at the consequent encroachment or the midpoint of the previous week, new week opening gap. That's a tongue twister. All right. So I think that's about all that I want to show here on the daily. Let's just, today I want to kind of teach you guys about balanced price ranges and how to trade high impact news drivers. Although volatile as hell, you can trade them. So we're going to skip over the 4 hour, the 1 hour, we're going to hop right into the 15-minute for the analysis, and we're just going to be looking at today's price action. CPI, it was yesterday. I would have loved to make a market review, but I want to make this short, sweet, to the point. I want to get out here and listen. 30 minutes, maybe an hour. But right here, you can see on the 15-minute chart. So what we have is right here, Thursday at midnight. That is our midnight open. Okay, so Power 3, just like I taught you guys in the previous video, or using midnight, using 8:30 for the New York session, or using 1:30 for the PM session. Those are going to be your times that you want to use. So typically, Power 3, you want to be buying under that midnight opening price. Okay? And let's go ahead and label that. Make that a little bit smaller. And let's go ahead and label that MNO. Keyboard is on that. All right, MNO. Anytime you see that on my chart, that is midnight open. Abbreviated, quick to the point, boom. You also see I have this red line here. That is our 4-hour BISI consequent encroachment. We'll get to that. That's your work. All you have to do is use your Fibonacci tool. You take it from a low to a high, and you're looking at the ranges in there. All right, that's all you're looking for. All right, we're gonna take that off. I'm gonna give anything away yet. So what we have here, midnight open, we consolidate around, and then we drop. All right, we drop right on down into the 830. All right, at 830, scroll back here. Gun in my head, I really anticipated a drop below these lows here. And if we scroll back, or for simplicity, we'll take a brief look at the 4-hour chart. We have a lot of sales side liquidity here, guys. Although we didn't take anything, just in here, look at how smooth and clean these levels are. That is a lot of sell side liquidity. I wanted to see a deeper sweep to take that out, especially here. You know, these levels, of course, relatively low. We want to look for to trade to and through those levels. And especially here, in my head, I'm thinking there's a lot of institutional funds, a lot of big funds that have a lot of money just chilling right here. I was pleasantly surprised that we did not take that out, although we have the weekly, order block mean threshold there. But let's drop back into the 15-minute. I wanted to see those liquidity levels taken. We didn't get it. That's okay. But what we do have is one thing that I did have notated, and I'll just make this area here. So this down close candle before this rally up, that is our bullish order block on the 15-minute chart. Okay, so at midnight we trade under, down to a discount, I apologize, into that 15-minute bullish order block. Okay, notice we don't even trade into the mean threshold of it. We just stop about a tick above it. We don't go right down into it. But at 8:30, they take sell side. Anyone who is long here, they are taken out. So this is going to be our first transition into the teaching. All right. So for any high impact news event or medium, typically whichever side of the marketplace they take out is normally the right side of the market. So anyone that was long in here, they're knocked out and they can't participate in this rally up. And you can see it was a nice little rally. I missed it. I didn't get any of it. I got my trade in, but I just took my low hanging fruit. You don't have to tap this entire daily range. So typically the first move, which was they take sell side for PPI, and then they take buy side. Okay. Typically things like non-farm payroll, CPI, PPI, what else is there? Jobless claim, whatever. Any medium to high impact, especially high impact, they're going to run both sides of the marketplace. Typically, if you are bullish, this is when you take notes. When you are bullish, you want to see some level of sell side taken, and then you want to see buy side taken. So essentially, you were thinking we're 50-50. Okay? Remember, if you are long, you want to be buying under the midnight opening price. What do we have here? We trade down in. Let me rephrase that. First of all, you do not need to be trading high impact news drivers. At 8:30, when that news is released, you don't know what's going to happen. If you have an open trade then, or you want to try to trade it, you will get fucked. That's bare bottoms. I don't care what kind of who says what, or I can trade this, whatever, I saw it coming. No, you cannot play these number releases, you can get your ass liquidated quickly. Okay, so let's go back. Typically, you want to be buying below the midnight opening price. You see we are below midnight open here. We drop down into almost the mean threshold of this bullish order block on the 50-minute chart. We rally, we take out the highs here, and we trade into this 15-minute SIBI, sell side imbalance, buy side inefficiency. Okay, so for high impact news drivers, like I said, they are going to take both sides of the marketplace. Typically, the one that's taken first is generally more than likely the right side of the market. As you can see for CPI, they take buy side first, and then they just run it down. All right. So PPI, we're gonna block that out. That's CPI, crazy day. We're gonna block that out. CPI is PPI, FOMC, non-farm payroll on crack. That's essentially it. All right. So we drop below opening price, rally, take buy side. Whenever you have a fair value gap like this left in the wake of this carnage, typically sell side was taken and we form a fair value gap after that 830 candle. Okay, you should be respecting a retracement into the range, and you want to see price come into, you want to see it respect the upper to midpoint of this gap. So you can see here, and this is just rough measurement, guys. So consequent encroachment for the midpoint of this imbalance. We'll make that green. Midpoint, and then we have this guy here. That is your first quadrant. So you see, we trade down into this busy, this fair value gap, and we respect it. We don't even close. We close above the first quadrant. That in itself is telling you that price wants to run and is bullish. Okay? If we do not even trade to and close through or at the consequent encroachment or midpoint of a fair value gap, we are bullish. Okay? So we drop down. We drop down into the consequent encroachment, and let's just go ahead and we'll label that for when we drop down into the lower time frames. 15-minute bullish. What am I doing, guys? 15-minute busy consequent encroachment. That is how we label that. And we're just gonna, if you guys can remember, this is the first quadrant of that busy. All right. The next thing that I want to turn your eye to is, let's move my mic. There's that noise. Alright, sorry about that, guys. Alright, so we trade down into the midpoint of this fair value gap. You can also see we trade down into this candle here, this up close candle. You can look at that as a breaker. You can look at it simply as a mitigation block. Okay, low, high, lower, low. The last up close candle before this displacement lower. That is an area for traders to mitigate their losses. That also aligns with the midpoint or consequent encroachment of that busy. That is a buy. Okay, that is that. All right. After 830 leaves this fair value gap in here, we trade back down into it. You should be thinking, so long as we respect the midpoint in the upper quadrant, we are bullish. Okay. Next, after we trade into this area here, what do you see in this area here? That is a balanced price range. All right. We trade into the midpoint, come back in, and we leave this balanced price range. All right. Highlight this. So, in balanced price ranges, that is where you have one pass, and it comes in a couple of different forms, but this form here, we have two fair value gaps that completely overlap after trading into this range and up. So between this candle's low and this candle's low, which one is higher? This one, okay? Obviously, we just have this high here. So where's our balanced price range, guys? Right here, right there. And let's fix this a little bit. All right. Apologize about that, guys. I'm trying to text my wife to turn that TV down. I don't know. Hopefully you guys can hear it. So I just want to fix this. I don't want this extended to the right. Take that. Yeah, we'll take the middle one. Okay. And we'll make that a little blue hue. Yeah. Time for a little sip of scotch. Alright. So where these candles overlap, that is our balanced price range from this candle's low to this candle's high. That is our balanced price range. Here is a winner chicken dinner for y'all. Anytime you see a balanced price range happen, and this happens on any time frame, okay? Anytime you see a balanced price range like this, where we have that overlap here, we don't want to see price go back to that, especially after already trading down into this fair value gap here. So what does that mean? What does that mean? How do you know if a candle or fair value gap is going to fill or not? Here's your example. We have a balanced price range. This entire area, the algorithm sees that as balanced. We should not see price trade deep or below the consequent encroachment of this balanced price range, okay? So, on this turnaround, you can be a buyer from the open to the midpoint of this candle and expect it to not trade down. You know, expect it not to take out this low, trade down into the consequent encroachment of this wick, or the consequent encroachment of either of these gaps. This is a breakaway gap, okay? So, what do we have? Trades down into the balanced price range, then we rally. Create another fair value gap here, retrade down into it, rally. So, let's drop down into the 5-minute chart. But again, when you have this happen in price, you want to see that and take a mental note of it, of that being a balanced price range. When you see that on top of this for a high impact news driver that leaves a fair value gap behind, if this is bearish, you flip it. If it leaves a SIBI, trades back up into it, respects the lower quadrant, short it. It is weak. This is strong. We trade down into the midpoint, rally, close above the first quadrant. Leaves a balanced price range in its wake, rallies higher. Breakaway gap. Anytime you see this balanced price range form, breakaway gap. Okay. Now we can trade into, we allow it to reprice to the upper quadrant to the midpoint, but we don't want to see it close below this balanced price range, the midpoint of the balanced price range, okay? If it does that, kill the trade, sit on your hands, wait and see what happens after that. But, like I said, this will become a breakaway gap, more than likely. Especially if we had price run into this, you know, trade into the midpoint, and then after it rallies out, forms a fair value gap. Anytime you have price return to a balanced price range and a fair value gap forms, a lot of the times that will in itself become a breakaway gap, meaning that I don't want to see that closed. I don't want to see it traded to. I don't want to see anything. It should act as a balanced price range, right? So let's drop into the 5-minute. All right. So again, 8:30. We have the 15-minute buy side imbalance, sell side inefficiency, consequent encroachment, and then the upper quadrant here, midnight open. We come above midnight open. One more time, remember, if we are bullish, we want to be buying at or below midnight open in price. We have midnight open trade below here, rally, we come right back under midnight open into the consequent encroachment or midpoint of that 15-minute fair value gap. Below midnight open, rally. Easy. Alright guys. Here, this is our balanced price range. What do we have here? We trade into the balanced price range. What did I just tell you all? We don't want to see price collect in here. Alright? Easy, easy. Alright, so we rally. We come up to the 4-hour fair value gap or BISI consequent encroachment. Look at how we respect it. Look at the bodies. Right at the midpoint. We consolidate here, rally. That's a buy. Inside of a fair value gap. What time is that? What is that? 11:50 to 12:10 macro? What time does this fair value gap form? 11:55. We drop down into it. We respect the midpoint of it. And the higher time frame 4-hour SIBI, or I apologize, BISI, after all of this movement in here. Okay? What are we looking for? Well, a Foos approach, easy peasy. You can low to high your standard deviations. We have low to high of this Dillon range, our fib projections. We have 50% and then the -1 standard deviation. Those are projections of where we could see price go to. And just for shits and giggles, let's see. We'll add 1.5. That would have been terminus. We do have a buy side liquidity pool right here from the higher time frames. But you can see we just bump above the -1 standard deviation. And you can see how price kind of just consolidates around that level. Pretty damn cool, huh? Typically, you want to be looking between a 50% or 0.5 to -1 for your projection, especially in a large range like this, okay? Now, you can also do your projections based off of the bodies. Okay, so this low is the highest close. What do we have here? 495.75. Pretty damn close to the high of the day, guys. Alright, just using Fibonacci. So, let's take that off. So, now we have this form during the 11:50 to 12:10 macro. We consolidate above within the first quadrant or upper range of this fair value gap, consolidating, respecting the 4-hour BISI, consequent encroachment or midpoint, and you see we just run right through the new week opening gap high, and then once again we open, we drop down just below the new week opening gap high, treats it as support, breakaway gap, boom, we just rally continuously higher. Okay, now we see all this price action, but let's break it down in here on the 1-minute chart. So, alright, scroll back. This is all freehand, guys. There was no script. I'm just right in here. All right, so we're going to scroll on. And again, guys, you need to have these macros in mind when you're trading every single day, okay? So on this retracement lower, we have, and here is your 2022 mark, all right? If you, like me, I took this short, all right? We have buy side liquidity taken here. Once again, we have just pierces it here, but again, rejection block. And what do we have right here? A fair value gap. This candle's low, so this candle's high. If we extend that here to here, we still respect that CB right there. Sell side imbalance, buy side inefficiency. We just consolidate inside of it. We continuously hammer it, hammer it, hammer it. Eventually, we get market structure shift below this swing low, this swing low. What is a swing low? Swing low is a candle in the middle that has a higher low to the left of it and a higher low to the right of it. That's your swing low. We break it. What do we have here? We have a small little gap in there. Not much, but what do we trade into after taking sell side and have a market structure shift? When we retrace, we trade into this order block. The order block would be this continuous range of candles where this displacement happened. You can see on my Instagram, that's the trade that I took into this 15-minute busy consequent encroachment because I knew that's where the reversal was going to happen. All right. We trade up, we come down. Again, volume imbalance. It's really, really small, but I promise your eyes will get used to it. Volume imbalance in here, right here. Drag that across. Look at how it's respected on top of this order block. All right. Let's take that off. We'll take this off. And again, this is that 15-minute balance price range. It looks a little bit different on the 1 minute, but essentially, this is what we're looking at. Okay, so at what's that macro that I always talk about? 950 to 1010, and then we have a 1050 to 1110 macro. Okay, so at 9, let's see, where are we? At 950, we rally, consolidate. Finally, we get a break lower at 10 o'clock after the opening first 30 minutes with the opening range. Market structure shift, trade up. Where's price going to go? If we're looking forward to trade back into the range of that fair value gap that formed on the 15-minute chart after PPI, the high impact news release, down. Look at this. Look at how the bodies stay above the midpoint, the consequent encroachment there. Okay, we have this here. That is your SIBI. What should we expect that to be like after we just run through it, after we trade into the consequent encroachment of the 15-minute fair value gap? We want to see that act as an inversion level, don't we? What does it leave? A fair value gap right in there. We trade down into it, rally. Okay, so if we are looking at this SIBI, so this candle's low, so this candle's high, where the fuck do the bodies close above? And what are we respecting on top of this fair value gap in here? The midpoint, consequent encroachment. This is our inversion fair value gap. That's your feel to go fucking low. You're welcome. All right, so we trade up through the balance price range. Remember, this entire thing is a 15-minute balance price range. We come up above it. We just tick right into it. But what do we have? Relative equal lows, sell side liquidity. All right. We rally, take out this high. We trade back down. We trade into this wick. The algorithm will see a wick just as a fair value gap. That's how I use them. So if we take this body, close to the low quarter, doesn't even trade down into consequent closure before it rallies. And again, this is during what time? 10:50 to 11:10. You have to remember these macro guys. I will do a video on macros, but I don't want to flood you with a bunch of information. But you can see it. Rally, pull back into the range. Again, rally. We have a little retracement going into the lunch at 11:30, and then we just continue to rally. Typically, what we want to see, so this is a 12 o'clock hour for the lunch start. We end, we just consolidate. Typically in the lunch session, it's either going to consolidate or it's going to run a liquidity at 12 o'clock for lunch. Who is profitable from the AM session going into the lunch session? Typically, you will see a run on liquidity in one of those areas. But you see we have one little liquidity grab here at 101. 1 o'clock will start, or for me personally, 1:30 will start the PM session. You see we drop down, take out these relative equal lows, and essentially trade into and respect the midpoint of this wick here. Okay. Pull back in. It's 1 o'clock. Essentially, you can see the rest is history. We are in a buy model today. What we have, we drop down again, new week opening gap low, blow straight through it, come down into the new week opening gap, consequent encroachment, rally, trade at support, down, rally. How many down close candles are in here? Not many. We are bullish. Don't look for shorts. Again, we have a rally after consolidating. Rally, leaves a fair value gap. Boom. That's your entry. Consolidate until 1:30. 1:30 for me, like I said, starts the PM session. Power 3. What did I say? It's really, really brief. But what do we have? 1:30 opening price. Here. We drop below it. We take out sell side. We trade into. It's tiny, tiny, tiny. You can barely see it, but we just tick right into this area here, almost into this other fair value gap. We rally. Again, leaves a fair value gap. Where are you looking for a fair value gap? Low. High. Typically, you want to be looking for a fair value gap from midpoint or equilibrium lower. In buy models, you don't always see that, but you do want to keep that in your notes. But again, what do we have that I just showed you on the 15-minute chart of why we shouldn't see price go into this fair value gap? Look to the left. What is that? A SIBI. What is this? A BISI. What is this? Which candle is higher? This low or this low? This low. So we're picking the higher fair value gap, if you guys haven't noticed. That is what you are trying to choose. This entire range, this run up, that again is another balanced price range after trading into a fair value gap. Balanced price range, run higher. I don't want to see price come back into here. That's your entry. You're welcome. All right. And it's essentially history from there. And let's annotate that. So we don't want to see price come down into that. That's our balanced price range. Entry that fair value gap there after a market structure shift, retrace down. We don't want to see it come into this. I'm using this low as an entry. My limit order is right there. What time of day is this? 1:44. Okay. After we've traded below the 130 opening price, we rally. Come in here. You can essentially see we consolidate, rally, pull back into the range of the new week opening gap. Essentially just consolidating all in here. Nothing essentially to see here. We will see what happens after Friday, Asia session. We'll make our buys then. I will be making another video on Saturday or Sunday, what I anticipate in the market for the upcoming week, and essentially that's it. But like I said, I wanted to make this a quick one. Do me a favor, if you stayed for the entire duration, like, subscribe, and I'll be back for more. And I will say that is it, guys. I will talk to you later, and we will do more revamps on market structure, balance price ranges, and high impact news drivers. Essentially, we're going to be covering the entire market here, guys. So stick along, wait for the entire ride. You're going to love it. You're going to learn a lot. Take your notes. I will talk to you guys later.